Yo, what's going on, everyone? Welcome back to another video. Today's video is going to be on how to predict the next moves in the market, whether the market is going to be going bullish for the short term or the market going to be going, bearish for the long term. How do you identify when price is going to be going down, when it's going to be going up? Now, we all know, throughout my videos, I've said multiple times, trade with the trend. Right, we do see this bullish structure happening, and obviously we do get tempted to take these sells, because even me, sometimes I do see these major retracement backs down, and I'm just thinking like, damn, that's a pretty big move, maybe I could potentially catch it, right? But with every single strategy or technique, it involves rules. So you need to have rules for everything. So there's rules for order blocks, right? We have rules for which order blocks are valid. We have rules for which order blocks are not valid. We have rules for how to implement liquidity, how to implement market structure. Everything in life around you, even real life things, it all revolves around rules. You need to have rules. So how do we predict that? How long is the market going to go down for? How is the retracement phase going to how much is it going to sell off? When is the expansion going to continue? How do you find these things out? Well, we have to implement a bunch of concepts in order to actually understand this. So before I do get into this, let me show you guys a few trades that we did end up taking in the mentorship this week. The course this week. As you can see, we caught this sell on GJ for about 81 pips. For the people that think, I'm capping, this is trades for the week. You can see the day, everything. So this is GJ sell. This is the before analysis. We were selling at 155.484 or 155.480, something like that. Now that's the before. You can see June 12th. You can also see when I open this, June 11th. And then this is the after, tapped in perfectly. Right, so I'm going to be basically going over this trade that we did take. That's a different one. And we also did call it in the Discord group chat for anyone that is wondering. So yeah, so let me delete all of this right now. And let's actually go back in time to just over here. So, boom. GJ is overall bullish. We know that price is extremely bullish. Now we know that after the market breaks structure, we're usually followed by either a really impulsive continuation towards the upside, or we're followed by some type of slowly choppy consolidation and then a small retracement, because we know the market moves in phases: impulse, retrace, consolidation. This is the impulse, this is that retrace, and this is consolidation. So we have three different phases in the market. Now I already made a video on institutional market phases, how to identify them. So yeah, so when we do see something like this happen, this is our current high. We need to see this high get broken in order for the market to continue going up. So we see this high get broken. Now after that's broken, what are we looking for? Well, we have a low, we have a high, we have a higher low, and now we have a higher high. Obviously we're waiting for that same exact thing to happen, but once again. So at this point, we're expecting price to create a higher low and then another higher high. So what this just told you is that every time the market breaks significant higher time frame structure, we retrace a lot. We have a pretty nice significant retrace back down, and then the retrace usually creates like an 80% retracement and then continues going higher. So we identify that price basically breaks structure, retraces, breaks structure, retraces. Perfect example is right here. Of a high, market creates this high point, and then boom, as soon as we broke it right here, price retraces back down. Now as we did end up breaking this high right here, we didn't get a pretty nice retracement, rather price just started consolidating. We had this little area of consolidation. Now what does this area of consolidation tell you? What this tells me is that this is a zone of manipulation. Now everyone in the course caught this. They understood this. They were not tempted to buy or sell in the zone, right? So we saw this area of consolidation. If we highlight this in a little zone like this, let's make this purple, or sorry, blue, we can easily see that there's liquidity resting over here, right? We have equal lows resting over here, and then we also have some type of equal highs resting above. Now everyone who's buying, they were doing pretty good, right? The market did respect this area of support, and the market pushed up. Now for the people that were selling, now look at this. Inside of this range, we have a really clean level of resistance right here. Retailers are looking to sell every time this resistance gets touched. We have a touch over here, I have another touch here, another touch here. Now that means that there's a bunch of liquidity resting above here. There's a ton of liquidity, meaning there's stop losses. So price is going to be prone to target the stop losses and go up. So The sellers, they got stopped out. We know the sellers got stopped out, but all that's left is the buyers. So I'm a little sick. So the buyers, right here, we can see that there's a ton of equal lows, right? It doesn't necessarily have to be right here. This entire zone is rather a manipulation area, but to me, you know, it just looks cleaner like this rather than that. So yeah, we have these equal lows over here, meaning that price is prone to sell off to take out all these lows out. There's too much stop losses of the buyers that have to get taken out. Now below this is obviously sell stops, and below this we have a nice push up that has a ton of imbalance. So if I do get my parallel channel and I draw my imbalance from this wick up to here, and we have some more imbalance from here up to here, we can see that there's imbalance and there's liquidity. So we have liquidity resting over here, and then we also have imbalance over here. So we have all these confirmations and clues to why price needs to go down. One, after the market creates or breaks a structure, price is technically considered to be overbought. That's one. Now two, we have imbalance. Three, liquidity. Four, market is slowly, being choppy. It's slowing down with that bullish momentum. We can see after this major impulsive move up, price started moving pretty slow. We did see this small little retracement. So at this point, I'm thinking, okay, maybe the market is overall now still bullish, but we could be potentially going down into the retracement phase to mitigate this imbalance here and take out these stop losses. Now, how did I catch this trade entry that I showed right over here? How did we catch this? Well, let's try to keep this simple as possible. So overall, we can see that when the market is in a retracement phase, or when we're moving bullish, price is going to look like this on the higher time frame easily. But inside of these retracements, what you're not seeing is that there's a ton of structure forming, right? We're seeing a ton of bearish structure forming before that move up. So inside of this bearish structure, the lows are being manipulated. Each time the lows are getting broken, we have a low over here, low gets broken. Another low over here, it gets broken. And then another low over here and it gets broken. Now, this is why it's important to stick to the higher time frame, but also implement the lower time frame to your best of abilities. Because when you are looking to sell this down, at one point, if price is basically retracing all the way back down to the open of the expansion of where the price originally expanded, you might get lost on the lower time frames. So that's why it's important to have your higher time frame bias correlate with your lower time frame bias. So right over here, let me actually delete this. Perfect. All right, so right over here, we go to the charts. We see that we had a low over here. Now this low clearly did end up getting broken. We had a continuation of structure. So this is basically telling me that, okay, GJ is potentially going to be, bearish now because we're breaking the lows, and overall we're slowly going on to the retracement phase. Now, one more thing is we also had a ton of imbalance resting right over here. A ton of imbalance resting right over here. Now, a little bit of it did get mitigated, but there's still more than 50% of this imbalance to get, that's left to get mitigated. So we have multiple reasons for why price needs to go down. We have multiple reasons for it. So obviously, like I said on my other videos, focus on the open of that break of structure, continuation of structure. In this case, we see a pretty clean 4-hour institutional candle right here. Now, I think I was on the 8-hour time frame, not the 4-hour. Now, 8-hour time frame wise, we had it marked up to here. Now, my entry was exactly 480. Let me quickly go to the after. 155,480. Perfect. So let's go to 155,480. 155.480. That's where the entry was. Now let's go down to see why I was looking to enter over here. Now with 4 hours pretty ugly, but let's go down to the 2-hour time frame and boom. Now on the 2-hour time frame, it's a lot more easier to understand. We have a pretty clean last institutional bullish candle before this major move down, right? That gave us a continuation of structure. So my overall point of interest was just this area right over here. And for all the haters saying I don't enter this, I'll leave a pretty obvious screenshot of my entry. I showed it to everyone, but yeah, I'll put it on the screen somewhere, like somewhere top left, top right, whatever. But yeah, so we have this institutional last bullish candle before that major move down. So I'm assuming that, okay, next time price comes over here, it'll possibly give me that same move down, but this time it'll mirror this and give me an even deeper push down towards the next lows that would be potentially this area of liquidity. Because remember, we're targeting wherever the liquidity is. Now, one thing that's interesting is when we did break this low over here, the market did the same thing. It pulled back to the last institutional bullish candle before that moved down that broke structure. So overall, it's just creating a pattern. It's like a code, right? It's like a Da Vinci code. You have to slowly just, what's the word, like crack the code. The markets are like females, not all females, even some males, but sometimes in life, if you're a female and you meet a guy, if you're a guy you meet a girl, they'll technically, they'll manipulate you. They'll make you think that, oh, this is who I am, but in reality there's someone else. So basically that's what the markets are. It's a crazy analogy. The market's like, oh, I'm bullish, but for the time being I'm bearish, right? So for the people that are on the 5-minute time frame, they're like, oh no, Traq, look at the overall trend. The trend is bearish 100%. Why are you buying? And then there's the the really smart traders. They're on the daily and they're like, yeah, so I'm gonna wait for price to calm down here and then I'll buy. Like, that's not gonna happen, So you gotta stick to you have to create a good balance of using the higher time frame and the lower time frame. So yeah, we have our point of interest right here, and from here we just simply wait for price to come near it. Now, one thing I did notice is as price was coming to our point of interest, we created liquidity, which is a good sign. This means that the market maker or institutions, whatever, the big money, the smart money, they're manipulating right over here. That means that retailers are buying over here. They created a level of resistance. Sorry, not buying, selling. Retailers are selling over here. So all the people that are selling, they're right about the direction. They're just wrong about the timing. So all those stop losses, they get taken up right over here. And that means that market is more prone and has a reason for why it needs to come up to tap into our POI and then sell off, which, gives us a better confirmation for our entry. Now from here, sorry, it was 480. I don't know why it's 495. 480. Boom. From here, price taps into our entry perfectly. This is a crazy perfect entry. Taps in super nicely. Now look, I always say in my videos, you don't want to enter without proper confirmation. So if you did enter with the limit, that would be pretty good. That's a 13.9 pip stop loss for a potential what's that, like 200 pips, 172 pips, which is a 12-1, which is insane. Now, I called this out. You guys did see right over here. This is the before. You guys saw this 480, 155.755. Let's try to copy that. 155.755, 755. So our stop loss was actually somewhere over here, I'm assuming. So this was still a pretty good 6-1 depending on where your targets were. But overall, this is a pretty good, entry. So price taps us in, and then overall, we see that it reacts pretty nicely. Now, I like to wait for more confirmation because I want a more better, deeper, better risk to reward with more confirmation with my trade. So once price came into my POI, instead of me selling right away, I waited for the confirmation. I waited for a Wyckoff. Now, this is where we can go to the charts right here, and we can see this. Limit set for GJ, as you can see, limit set for GJ. Price made its way inside of our POI, showing us a nice distro schematic, and then we got that BOS, and boom. So we see this really clean distribution schematic. So let's go to Wyckoff. Let's go to our trades. Now let's go to the 9-minute time frame because I spotted this on the 9-minute. Now Wyckoff distribution, clean setup. PSY, right after the PSY, you have the buyer's climax. So let's go to look for that. PSY is right over here. Let me make this caps PSY. And then right after the PSY, what are we followed by? We're followed by a buyer's climax. So we have the boom and then boom. Buyer's climax right over here. Now after the BC, we're followed by a nice deep retracement, which is your automatic rally. So technically I could say, all right, this is my automatic rally, right? AR. And then after the AR, you're followed by a nice retracement back up called the secondary test, which is retesting any supply in the BC. So right here, we can see that this is our ST. The market came back, tested any little bit of supply at the BC, and then we're followed by a sign of weakness. Now, this sign of weakness is really important. You want to make sure that you have that. This basically tells you that now the trend is overall going to be moving bearish now. Because now we're seeing, lower lows, lower highs being formed instead of higher highs, higher lows. That's your first sign that the market is overall going to be moving bearish. Now, after the sign of weakness, you have your UT. So technically, you'd say this is your UT and then that's your UTAD, depending on how you look at Wyckoff. But Yeah, so you have your UTAD. Now, obviously, we didn't catch the sell. We didn't sell over here. Instead, we had 2 points of interest. The first one was right here. We have this last bullish candle right here and this last bullish candle right here. Now, you can see that right here, we had this, last higher low and then the higher high. The market broke past this previous higher low right over here, which basically confirms that the market is overall moving bearish on the smaller time frame now. Because remember, we're on the 5 minute right, and we're on the 9 minute right now. So this all happened after price tapped into our higher time frame POI, and that basically tells us that overall our POI was correct, and it caused the market to be so bearish that it broke structure. Now structure is moving bearish as well. So we have our our institutional candles, one right over here, the second one right here, and as you guys saw, I said set limits for both. So first one, let's set this up right here. First entry was right here, and the second entry was right over here or something like that, my bad. So let's see what the risk to reward is like now. So risk to reward now is even better, 3.7 pips for a 102 pip take profit. Now if you were looking to target like the liquidity, which we were, that would have been even nicer, 159 pips, right? And then our second POI was just over here, this point of interest right here, with a stop loss at the high and then TP at the same level. So let's see what the market ended up doing. Let's call this out now. Hate when this takes time, but yeah. So alright, so boom. So the first one completely lost, 1% gone. That's 1% out of my account. This one did not play out, but luckily the second point of interest played out perfectly. You can see the entry was 155,352, worked out perfectly. I showed the before and after, and now at this point we can also notice that we created liquidity at the lows, which indicates that price is more prone to go down there now. So we have multiple reasons for why price has to go down. Now we have the smaller time frame by our side, and we have the higher time frame by our side. So, and this didn't hit stop loss, as you can see. So this was a nice 43-1 if you held it down to here. Now I didn't hold it down to here. We closed out like I think 90 pips profit, something like that. But yeah, let's hold this out and let's see what the market did. So as you can see, completely smashed our take profit, and this was sent out to the group chat. As you can see right here, everyone caught this. We set it out. Now this was a really easy, simple trade to understand. Price made its run all the way back down to where the imbalance was and where the liquidity was, because liquidity and imbalance is strong. That's where the smart money is. Imbalance tells us where price might go to fill it in, and liquidity is like telling us that where the most money is. And as we know, money is one of the most important things in the market. Wherever the money lies the most, that's where the market is going to take price. So this was one trade we did catch, and the second one was EJ. Now, EJ was a really crazy trade. I'm not going to get too in depth with this. I'm going to try to keep this simple and short. So let's go back in time just over here. So boom, we can see that the market created some type of distribution schematic right here. Let's actually dive deep into this on the 1 hour and let's understand this. So we had a PSY somewhere on like the smaller time frame. Let me actually just find it. Screw it. So the PSY was right over here. Right here, this is our PSY. After the PSY, we have our buyer's climax. Once we have the buyer's climax, I didn't mark it up, but we had an automatic rally just over here, right? And then we have that secondary test coming back up, and then we have that sign of weakness. Now, after that sign of weakness, we created a bunch of liquidity here. The market made a run above that liquidity, which was our upper thrust, and then price from there made its way down. Now, we had our LPSY on the higher time frames. Right, so we had our LPSY just over here. This is our last point of supply, and as you can see, price tapped in perfectly from here. Now, what's interesting about this move is it tapped into the LPSY, and then it cleared liquidity. And after that, it cleared liquidity. We see that the market gave us a really deep, nice push towards the downside after that. So from there, I was on the 5-minute time frame. I was looking for points of interest we could focus on. So as you can see, our POI was 133675. Now let's go back to the Discord. Right here you can see that it was 133672. Same thing, a couple pips different, but yeah, same thing. So from here, all we really did is we waited for price to come into our POI. Let's go down to the 4 hour and let's let this run, and let's see what price ends up doing. So boom, price taps into our POI. Now some people entered right away for the sell. I didn't. I waited for the confirmation. So once price did tap into my POI, from there, I basically just waited for a little bit of confirmation, right? So boom, we see price taps into our point of interest and automatically sells off, breaking a ton of bullish structure. High, higher low, high, higher low, higher high. We break a ton of structure. Now this is enough confirmation to tell me that, okay, our point of interest was correct, and all I really need to look for now is my last bullish candle before what do you call it, my last bullish candle before that major move down. So in this case, I was focusing on this one right here because it looked the cleanest. That's literally why, because it looked the cleanest. So let's go back to the Discord. You can see right here, so I said I'm setting limits, on the 15-minute time frame. Was really clean. So let's go down to the 15-minute time frame wise. You could see that I'm not sure why it's not showing now, properly, but yeah, this was where we were originally looking to sell at. So let's play this out. Let's see what the market did do, or what it did. And from here you can see it tapped in perfectly to our smaller time frame POI right here. I'll show you guys the entry of this on the chart as well, on my MetaTrader. But yeah, price taps in perfectly from here and makes a run down to, let's actually just quickly play this out. As you can see, it made a run down to where? The liquidity. So I hope you understand how I'm catching these moves. It's really simple, right? It's really, really simple. All we're doing is we're identifying where the liquidity is, and we're identifying where the imbalance is. In this case, we saw the distribution schematic, and then we saw that daily break of structure, or that 4-hour break of structure rather. Once we saw that 4-hour break of structure, that overall gave me an idea that the market could be potentially moving bearish now. And that was enough confirmation for me to assume that price is now bearish. So once we did do that, we waited for a confirmation. Price tapped in, 95 pips capped with a 1 pip stop loss. 1 pip stop loss with a 95 pip TP. I showed you the proof. If you guys did see the MetaTrader as well. But yeah, now we were obviously looking to target the liquidity, which is right over here, these equal lows. And as you can see, the market made a run down below it. Now it made a run down below it perfectly, smacking your TP for a 100-to-1. So overall, this was a pretty crazy week. I hope you guys enjoyed this video, and how to catch these buy to sells or sells to buys, and how to catch these small retracements back down in an uptrend. But anyways, thank you guys for watching. Leave a like, comment below, and if you do have any questions, leave it in the comments below, and I'll get back to you as soon as possible. Thank you so much for watching. Make sure you subscribe, and have a good one. Peace.